right, everyone. Welcome to Chart Attack. This is Vishal from Equity Guru. It's been a while, but we have a lot to talk about here. Specifically, this video just on the stock markets, but I do have one on the precious metals and also on crypto coming out a bit later. But let's start with the stock markets and the big question: have the markets bottomed here? I have the chart here of the S&P 500, which again was battling at bear market territory. Once again, that definition is 20% off from the highs. We were, in and out of a bear market. NASDAQ, of course, is already in a bear market, but the S&P was about to join in. But it looks like for now, we are beginning to bounce above that level, that threshold, which would take us into a bear market. So again, are we bottoming here? And you can see this is a daily chart of the S&P 500. We have multiple days now of price just holding these recent lows around 3,800 here, 3,880, sorry. We did hit a bottom of 3,800, so a nice large wick there. And usually when you see a large wick like that indicating buying pressure, you see a lot of range. It gives this impression, that the selling pressure has now exhausted. Because we're not making any more new lows, and perhaps from here the bulls can start taking back control. One issue though is, and again, not just me saying this, a lot of other people have been saying this as well, the volume is just not as high as you think it would be. So yes, the selling pressure has exhausted, but there's still not enough volume that indicates this large wave of bulls coming in. But I personally believe that there is going to be a bit of a bounce here in all the equity markets, and I'll give you a number or a level I'm watching to basically determine whether this market is now, out of this downtrend. But as you can see here on the S&P 500, the daily chart, nice bottoming pattern here. You have the same on the NASDAQ here as well, and then the Dow Jones. That's sort of the big winner here, and it's actually approaching that big 33,000. Resistance level, which is going to be interesting to see how we react if the sellers are going to jump in there as well. But this big move recently, and on the day we're recording this on the 26th of May, the big news, of course, is this first quarter GDP declined by 1.5%, worse than expected. This is the worst GDP number that's come out since the pandemic, quarter two of 2020. And the thinking is now that, okay, if the GDP is so bad, we're going into the recession, or we're going into a recession perhaps in the future. Once again, you need two consecutive quarters. So if the second quarter GDP also declines, the US is officially in a recession. But the thinking is, if we go into a recession, the Fed will have to pause monetary policy, or in fact, cut interest rates, because that's what they tend to do in order to spur the economy. So a lot of people joking that, hey, let me get this right. The markets are up because the economy is so bad that the market and investors are expecting more cheaper money as the Fed cuts interest rates. But that's the kind of world I guess we live in here. I want to take this to the weekly chart because there's a few things I want to show you guys. And you guys, if you've been following my work, you know how important these weekly charts are, because we have our head and shoulder reversal pattern right here. And this is a big level, folks. It's still that 4,200 level. That's still the major level on the S&P 500. And I do believe, we are seeing just, right now a pullback. That's why I'm not claiming that this is the bottom just yet. But I do believe we will make a brief or, a move. It might take a few days or a few weeks to get us back to 4,200. And then from there, if the sellers do jump in, and again, if they do, right? So we're going to be watching how price reacts at 4,200. That's when we can maybe see the sellers jump back in and take us lower to 3,600. So I'm not saying that this is just the bottom, because there's still these major resistance levels on the weekly charts that need to be taken out or reclaimed by the bulls to invalidate this downtrend right now. And you can see even on the NASDAQ, the same sort of analysis there. And I find this one interesting because the Dow Jones is actually the closest to that 33,000 sort of resistance level. And we might be testing that, as you're watching this video, actually. So big key levels there, a bit more hope some more confluence, I guess you can say, that backs this whole idea of a pullback and potentially a bottom and a reversal on the equity markets is the action in the US dollar here. We're seeing a drop in the dollar, same sort of pattern here that we've been basically waiting to see if we're going to hold 102.50 and continue. We got that break, and right now the sellers are pulling back or jumping in, sorry, on that retest. And I do believe the dollar could make a move lower back to 100. However, if money runs back into the dollar, say for fear, safe haven reasons, and we move up rather than down and we take back 102.50, that's probably going to be your sign that the markets are actually going to be weakened because they're afraid of something. So keep an eye out on this dollar, a nice breakout, which is hinting to a bit more of a pullback in the equity markets, and also a good news for you crypto guys and also your you precious metal guys, because I think you're going to get a bit of a bid there as well. And then one more chart here just to sort of add to this idea that markets are going to get propped up here a bit. This idea that the 10-year yield is also showing some sort of signs of a top right now at around, we hit highs of about 3.2%. Now we're at 2.742%. And I see a bit of a head and shoulder pattern here as well. But again, nothing confirmed until we break below this 2.70 level, which also could mean, a bit more of relief rally for the stock market. So right now, expect a bit of a bounce here. I'm not saying this is just the bottom because there's a few more resistance levels to watch, but big levels will be tested on these equity markets in the next few days. Keep an eye out on the dollar and also watch what happens to that 10-year yield. And once those weekly resistance levels are taken out and reclaimed, we can then sort of safely begin to say, okay, it looks like the markets and investors are now not afraid, or they're expecting the Fed to, cut less or something, or maybe, they have confidence in the Federal Reserve now to beat inflation, right? When that happens, then we can start to say, okay, these markets are bottomed and that downtrend is over. But as of now, seeing a brief basing, maybe a bit of a bounce here, and we'll assess as the days and weeks go by. But that's it for me, folks. If you enjoyed the video, give it a thumbs up. And in the comments below, let me know if you guys think this is the bottom. Are you buying the dip here, or are you still saving some, powder on the side there, saving your cash because you do believe that this is still just a dead cat bounce, I guess, or a little relief rally before we continue a move downwards? Let me know. I'm going to be reading those comments there, and I'll see you guys in the next chart attack video.